Hello and good evening, everyone. Welcome to Paytm Money Talk. And today, the topic for discussion is ESG Fund, a new theme in making. So, those who are not aware of what the ESG investing is all about, it's going to be a very, very interesting session. It's all about environment, society, and governance. Now, as we know that the market, the society gives more respect, more value to those companies who behave in a very, very responsible way towards the environment, towards the society, and also have proper corporate governance. Now, I'm Neeraj Gogoi, your host for the talk, and I'm a trader, I'm an investor, and also I'd like to tell you that this talk is powered by Paytm Money. Okay, welcome back. So before I start, let me quickly tell you about what the Paytm Money Talk is all about. So Paytm Money Talk is such a platform where we share new ideas, new strategies, and new way of investing in the market. So our endeavor is to consistently produce high quality content. So we get experts from the market with decades of experience in different areas, be it mutual fund investing, be it bonds, be it gold, or different areas of investing, so that we can consistently give and give new concept to our listeners and the viewers. So today the topic is, of course, as we said, ESG investing. It's going to be a very, very interesting topic. It's a new one, and of course the concept was originated by from Kofi Annan, from former UN General Secretary. He coined the term ESG. And today, this episode is going to be the main chief guest for this episode is going to be Mr. Chirag Mehta from Quantum AMC. So let me introduce Mr. Chirag Mehta. He's a chief investment officer. He has got almost 2 decades of experience in Indian commodities market. He also specializes in the field of alternative investment strategy. He is a qualified chartered alternative investment analyst, and he has completed his master's in management studies in finance. He currently manages funds largely in the field of alternative investment that includes gold fund, multi-asset fund, fund of funds, and equity fund of funds, and also fund manager of Quantum India's ESG equity fund. He joined Quantum Fund after having a good amount of experience with Kotak and company. So welcome, Chirag. Welcome to the show.
Thank you so much, Neeraj. Pleasure to be here.
Yeah, it's a great to have you. In fact, the topic today is very exciting. It's quite new to many of the people, in fact, and in fact, it's going to be a great learning experience for all of us. So to start with, just tell us what ESG investing is all about. What is the concept of ESG investing? If you can give a backdrop, if you say how it originated and what is the consciousness about this throughout the world.
Sure. So traditionally, we have all focused about looking at the bottom line, revenue growth, profit growth of companies. But the world is changing very fast around us, and it's becoming very, very interconnected. And there are various risks that are emerging, right? Not only from financial world, but also from the non-financial world. For example, environment or society, how the company treats its environments or how the environment impacts the company is becoming more and more crucial. So if you look at headlines over last 1 month, there have been natural catastrophes in some of the other part of the world, whether it be floods, whether it be droughts, whether it be wildfires. So there have been various natural calamities happening, and it is not natural to occur. It is human made. So increasingly, our world is going towards more global warming that we are seeing, and temperatures are rising. which will
Mhm.
have impact on companies from an environmental perspective. For example, sea levels could rise, there could be more floods, could be no water availability, or raw material availability could become scarce. So there are many risks that the company now faces, not only from an environment perspective or not only from financial perspective, but also from environment and society. Retaining talent is becoming very, very crucial for many industries and companies. So from that perspective, how they treat their workforce, how they have health and safety practices, how they are utilizing in some shape or form their social license to operate is becoming very, very crucial factor. And even consumer preferences are changing from that perspective. So consumers are giving or paying more attention in terms of how the company behaves and takes a social license to operate as a given, or whether they are treating it very, very seriously. And governance has always been such an important factor when it comes to investment. So if you have not paid in terms of how the company's management
Mhm.
is, what its pedigree is, what its business ethics are, how they treat the minority shareholders, have always been so important, because one bad investment from a corporate governance perspective, or if you have missed it, that could lead to serious losses for your investments. So overall, given the changing landscape that we are seeing, an impact of various other factors apart from financials is becoming very, very crucial in an assessment. So yeah, traditionally, you would have heard, Neeraj, I think, that
Yeah.
quality is a very important parameter when it comes to
Mhm.
evaluation of any company. Yeah, financial is just one prospect, but the quality
Mhm.
of company is becoming very, very important. And time and again, legendary investors have said quality companies have delivered handsome returns for them, compounded returns for them over a long period of time. So ESG is today's mark of quality or assessing quality of companies. And
Mhm.
if you look at, generally, it is how the company builds and fosters the relationship with various stakeholders. So be it environment, be it society meaning employees, customers, vendors, suppliers, and governance, which has always been very, very important. So amalgamation of all three, which tells you that what kind of quality that company is in, and that is assessing of the ESG parameters of that company. So I think in today's parlance, quality is synonymous to ESG evaluation. And if you evaluate that well, of course, you need to focus on financials as well. But ESG is becoming very, very paramount. But otherwise, there are risks that will emanate from that company which you are unaware of, and you could have serious losses on your investments. So I think ESG as an evaluation of any company is becoming increasing important by the day.
Okay. So if I have to understand now, when you do analysis of a company, fundamental analysis, quantitative aspect and qualitative aspect, and where ESG is the most important one, the very important factor. Now the question is how ESG investing is different from traditional investing in India. Now again, in India we have got something called CSR activities, right? Uh, Corporate social responsibilities. The companies are already doing that. So how it is going to be different than the ESG? Can you throw some light onto that?
Sure. So many think that ESG is equal to CSR, but ESG
Correct.
CSR is just a very small portion. It's just 2% of the profits that the company spends towards betterment of the society where they operate, right? So it's
Mhm.
not a CSR just that makes a company ESG positive or ESG compliant. There are many more factors that go into ESG evaluation. You
Mhm.
compared it, saying how different it is from financial world. So in financial world, we'll typically look at revenue growth, what is the profitability, what are the prospects for the company, what is the moat of the company, and whether that
Mhm.
moat is being challenged by other people or not, or other competitors or not. And whether the company will be able to get that advantage because of the moat that they have developed, and therefore thrive over a period of time. But now, if you look at, apart from that moat can be challenged in various manners. Like, what is the regulatory landscape shaping like? What is the
Mhm.
consumer preferences changing? Or what is the supply chain impact in terms of whether the company will be able to operate in the way it has been or not? For example, a company operating near the coastal areas, if it is unaware of the rising sea level in that region, then probably it could
Mhm.
have a serious disruption to its operations if it is unprepared. So if that company is diversifying into regions as far as operations are concerned, then probably it is a better company from a risk perspective, and therefore the profitability or the compounding that you're looking for in that company will continue. Otherwise, you could have a serious loss on that investment. So there are factors from environment perspective in terms of, is the company prepared from a environmental regulatory change or not? Whether, for example, India has not contributed to the climate problem, but it
Mhm.
has to be part of the solution for climate change.
Mhm.
For example,
Mhm.
India is still the third largest polluter globally, but it is on a per capita basis very, very minuscule of what the world averages are or where USA or Europe are, right? So if
Mhm.
India, as it grows up the income curve, we have surpassed the $2,000 per capita GDP mark, and from here on, it's going to be a significant jump in per capita GDP over a period of time. If that happens and we consume like the way the West has done, then probably there is going to be a serious climate problem at hand. So there will be
Mhm.
regulations that will come not only by India, but the world will force and ensure that India grows more sustainably. Otherwise, the targets that we have on climate globally are not going to be met. So from that perspective, there will be a regulatory threat, regulatory risk if the company is not adhering to certain thresholds. As we have seen, there are many regulations that have come, like perform, achieve, and trade. Which is a carbon capping mechanism that the government has introduced, or there could be carbon pricing that will come sooner or later. So there will be many things that will come from a regulatory side on the environmental front. Also, from a waste perspective, for example,
Mhm.
there is already EPR guidelines that the government has come up. If the companies are not able to adhere to those, then probably they'll have a problem going forward. And these regulations will keep getting stringent over a period of time. So if the companies are not geared
Mhm.
towards meeting those, and when these regulations unfold, all those companies who are already prepared will be the ones that will focus on business. Others will be focusing on meeting the regulations, and therefore they'll be ahead of the curve and therefore gain more business or market share over a period of time. So these resources are becoming scarce. There is
Mhm.
regulatory threat, and therefore companies that are not geared to meet them are going to be having problems, and companies who are geared to meet them has an opportunity with them. So, environment is one area. Society is another. For example, society, people think that CSR is the only thing, but health and safety policies, retaining talent. Third important emerging area on the social side is cyber risk. Many banks, for example, or financial institutions
Mhm.
or IT companies for that matter, have a big risk because they handle a lot of customer information. And if they don't have good cyber policies, they'll have a big issue going down the line. Say a bank with which you are banking with have a cyber attack, for example, then are you going to bank with that bank again or not? Is the question that one will ask. So there are new and emerging risks for many of these traditional sectors or companies, and therefore, if they are not looking at those kind of areas, then probably they'll have a problem. So ESG holistically will look at evaluation of all these, how companies are prepared to meet the challenges of today and tomorrow, and therefore in a better shape to safeguard you from risk and also grab the opportunities as they come. So it is very,
Wonderful.
very different from financial analysis, but it is very,
Yeah.
very important.
Very important. So, anyway, what I understood from what you have said is ESG is a way of life. It's not about just contributing 2% of the net profit annually and thinking that my responsibility is over. It's much beyond. It's a way of doing business, it's a way of life, probably.
Absolutely.
And that is what we have seen in recently what happened in China, last week, what happened in India. That is why I think it's getting more and more important. And as it now, one more question here. When you talk about ESG, you are talking about that regulations are going to be more and more stringent, and going ahead, probably those companies who are going to thrive who are ESG, compliant. Now, again, coming to the compliance question, is there any ESG norms in India as such? How do you know the company stands compliant to ESG norms? How do I know as a lay investor?
So, as a lay investor, it's very, very difficult. I will agree with that because there are different regulations in different aspects, right? For
Correct.
example, there are certain environmental regulations for carbon intensive industries. There are waste
Hmm.
regulations for certain type of industries. Uh, there are health and safety standards for certain type of industries, so it differs by sector to sector. And also it's challenging for a lay investor to kind of keep ahead in terms of what regulations or how they are changing over a period of time, or what's going to be the
Correct.
next regulation. You have to predict what's going to be the next regulation, and what, like looking at the global best practices, even India will have to follow that. And therefore, are the companies prepared for the next regulation or not? That is going to be very, very important. So I think for a lay investor, it is very difficult. You need a team of analysts to kind of look at each industry and see what's going on, how the company practices are shaping up. And we generally look at three things in any
Hmm.
company: whether the company
Yes.
has intent to change or not, whether
Hmm.
company has shown any progress towards changing or improving or not, and third, whether the company has any targets to achieve over a period of time, and those targets should be backed by a credible plan. So you need an
Hmm.
evaluation of all these three things to kind of
Hmm.
identify whether the company is serious or is just doing a lip service by talking big things or throwing big targets out in the air. So I think it
Correct.
is very difficult for a lay investor to know the regulation firstly, and to analyze whether the company is serious about it or not.
Yes, there we need the professional help, probably, right?
Absolutely. Like you go to a doctor, you need a professional to evaluate this. And it's not a one person job, you need a team of analysts to do that.
Now, you are coming up with an ESG fund. So you are the first fund, or there are already ESG funds are there in the market? Like, can you tell us more about your ESG fund? Like, how
Sure.
do you select companies for the fund, and how different from selecting a company from other funds? Like, we've got large cap, mid cap, small cap, different teams are there,
Sure.
and you have got a
Sure.
ESG team. So how different is selecting a company for ESG fund than selecting a company for other funds? एंड अगर हम लोग थोड़ा हिंदी में भी बोलेंगे तो और अच्छा होगा, क्योंकि बहुत सारा
Sure.
ऑडियंस है, सो हम लोग मिक्स करके बात करते हैं. या.
Absolutely, Neeraj. So, बहुत अलग है to compare a fund which is looking at just the financials of a company versus ESG fund. ESG fund will look at various evaluation of non-financial metrics as well. Whereas a traditional fund may look at, say, what are the financials of a company, plus they might look at the governance of a company. For example, they might look at what is business ethics, how the company has treated minority shareholders, उनका evaluation करेंगे. Whereas ESG will look at the ESG factors in detail, each of the areas of material ESG factors for a company. जैसे environment में what are the risks that this company may face, what are the factors that should be considered for social, or क्या governance criteria generally common for all type of industries. So to give you a background, we launched this fund in 2019, July 2019. We have completed about 4 years of the ESG fund currently. We were the second fund. One other fund was from an existing mutual fund player, which was a convert from a traditional equity fund to an ESG fund. Whereas a pure ESG fund, we were the first ones to launch, not a converted fund in that sense. And we were the first fund to launch a fund based on proprietary research. Like we don't buy any third party ratings or third party scores on ESG. We do our own analysis on ESG as well. So we have a team of dedicated ESG analysts for the ESG fund, and that team does evaluation of ESG factors. So in that sense, we are very, very unique and very, very different, given we rely on proprietary research. And I will tell you why we did that. So given that ESG was new thing, data was scarce. Not many companies were publishing a lot of ESG data at then. Uh, what we had to do, look at various secondary sources, unconventional sources to get a lot of data. So that is where we thought that we need our own proprietary data rather than relying on a third party data. Or the way we use this ESG data is also very unique. People say that it's an ESG fund, and therefore we think that sustainability is the driver for returns, and therefore we need to emphasize ESG. So traditionally, what we have seen in other markets or other areas is what people do is ESG एक filter mechanism बन जाता है. उसके बाद there is it gets taken over by something else, like financials of a company will decide what weight it gets assigned to that stock in the portfolio. But what we did, we flipped it around. We said that if this is an ESG fund, then ESG should be the driver of the returns. So our weighing depends on the ESG score that we arrive through a proprietary research for that stock, and other things like financials, other things like sectors become guardrails to that ESG score. So ESG does decide the weight of the stock in the portfolio, but we change or increase or decrease that weight depending on how the financials of that company are, or how the sector allocation to that sector has been or company has been, will decide what weight we upgrade or downgrade to that particular stock. So here we are trying to be true to mandate, true to ESG, and we think that there is merit, and our track record shows that there is merit in terms of emphasizing ESG enough to get that outperformance. So ESG companies typically are more innovative in nature because they are trying to adhere to the ESG norms while being competitive in the market, and the financials are proof that they are good, efficient companies while they are adhering to the ESG mandate. So those companies usually are more innovative. They have a culture that builds trust and fosters innovation, and therefore they are in a better shape to stay ahead of the curve, not only when it comes to ESG compliance, but also apart from when you compare it with the competition. So these companies are kind of better companies because they are good ESG. They have shown that their capital allocation decisions over a period of time have done well. They have shown that they are quality companies, and they have good financials. So that's a winning combination that could lead you to that outperformance that you're looking for. And therefore, we think that the approach that we have of emphasizing ESG, translating into weight of companies, is working well for us.
Okay. So you mean to say that companies, ESG compliant companies are basically very good citizens. They are innovative. They basically qualify. And so, let me ask you, when you compare the performance, how is their performance? You might have observed over a period of time, a good ESG compliant company's performance vis-a-vis a normal company. So do you see any difference? They're performing. How do you see the difference?
So there are 2-3 data that I can highlight here. एक तो आप ESG index ले लीजिए और normal market cap weighted index ले लीजिए, which is a non-ESG index. And over a period of time, ESG indexes have beaten the normal market cap weighted indexes. So if you look at 10-15 years of data of comparing a ESG index to a non-ESG index, ESG index has done better.
Okay.
Second,
do you have an ESG index as well, Chirag?
Yes, there are 2 ESG index.
Okay.
One is by NSE, which is Nifty 100 ESG index. They have certain variants of that index as well. Another couple of index also. But the main index that is the benchmark of our fund is Nifty 100 ESG index. There is one from a global agency like MSCI. There's MSCI India ESG Leaders Index. So there are ESG indexes which they have, showcased performance of those indexes backtracked since 2007, 2008. And that longer term track record shows there is a significant outperformance of ESG index versus the non-ESG index of the same entity. So for example, the Nifty 100 index versus Nifty 100 ESG index, if you compare both, are both based on 100 as a universe. Nifty 100 ESG has outperformed Nifty 100 index over the long run. MSCI India ESG Leaders Index has outperformed MSCI India Index, which tells you that, for both the indexes, ESG is done better. Firstly, that. Second is when we looked at, so we last year when we completed a 3-year track record
Mm.
of our fund, we looked at our
Mhm.
entire database, not only the stocks that we had in the portfolio, but not keeping any bias. We compared the entire database of about 160 companies that we had covered so far, and evaluation of that database told us that good ESG company or positive ESG companies outperformed as a subset to
Mhm.
negative ESG companies. So
Okay.
we took an average returns of all positive companies and average return of all negative companies, or positive companies subset outperform the negative subset by a margin. Third, when we looked at our performance and of the Quantum India ESG Equity Fund, and we did the attribution analysis, that told us that the outperformance that we have is not because of the sector allocation; it is
Mm.
coming from the stock selection. That also
Mhm.
tells us that stock selection is driving, and stock selection is dependent on ESG score of that company, and this tells
Mhm.
us that ESG scores does well in terms of getting that outperformance that we have for the fund. So overall, all three evidences suggest that ESG does well over the long run.
That's a very, very interesting insight I think you have shared. In fact, I also would like to request our viewers, if you have got any questions, please feel free, go ahead, type your question in the chat box, and I would like to ask that same question to Chirag. Chirag, I think
Sure.
you got a presentation as well. You might be having certain data points which make the whole concept even more clear. So,
Sure.
if we can present the PPT, and that will be wonderful. Riti, if you can share the
Yeah, just I
presentation.
had a couple of
Yeah.
basic things that we've already spoken about. So,
Yeah.
what goes into evaluation of ESG factors? So, ESG
Right.
is trying to meet the triple bottom line, the three
Hmm.
P's: the planet, people, and profit. So,
Hmm.
so we think that all profit and responsibility are very, very interlinked and not separate. If you're
Hmm.
responsible, you will earn that profits, because people will value, street will value, give you a higher valuation because you are less risky, and you are also trying to be a better corporate citizen, and therefore street gives you valuation which is higher than normally you would get otherwise. So in the
Hmm.
environment side, you look at uh, what is it, climate change is for real, so it does impact
Hmm.
company, and incrementally we have seen evidence of it impacting companies. So how the company is impacting the climate, because that is where regulations will come, and how the company is impacted by the climate change into its
Hmm.
operations, right? For example, everyone is trying to, from a consumer preference perspective or from a regulatory perspective, people are trying to move towards electronic vehicles, right? EVs. So if there is a shift to EVs, and if the auto company that you are invested in does not
Hmm.
look at EVs and tries just on the ICE engines, then probably sometime later you might have a problem with that investment, because people will think that it's becoming riskier to be in that company because it's not emerging with the trend of the market. Also, if there are regulations, then the company will have a problem. So that is one thing that you need to be aware of. GHG emissions. So people earlier thought that scale and scope was everything.
Hmm.
People kind of took pollution as a free factor, and labor, they didn't adhere to the norms. But now it's becoming incrementally more regulatory in nature. Also, it
Hmm.
is becoming important from a stakeholder perspective to kind of value those things. Again, water is a scarce commodity. We have been taking it for granted, but there are many industries which are operating in a very high baseline stressed water area. So if there
Hmm.
is a drought, what do you think will happen with that company? Whether the government will give priority to people, or will it give priority to the industry? It will clearly give
Hmm.
priority to people, and therefore if you are heavily reliant on water for your operations, then you will have a big problem in a drought year, right? So people are not looking at those facets and just saying that those risks may not occur, but in
Hmm.
reality we are getting very, very closer to those risks. Waste is becoming very, very important again, because waste, people think that they can dump waste in lakes and rivers, which is
Correct.
not the thing anymore, right?
Mm-hmm.
There are many regulations shaping. People are being caught. Companies are being caught. The pollution control boards are monitoring them very, very seriously. So again, having a proper waste management system is becoming very, very important. Similarly, on the social side, you already spoke about corporate social responsibility, which is 2% of profits. But very important thing is, gender diversity, which we take it for granted, saying that, it does not matter. But we have seen time and again in decision making, it has played a very crucial role in bringing a perspective to important decisions. And therefore, companies which have better diversity, not only at the bottom, but also at the top, is kind of having a winning streak. Also, privacy and data security we spoke about is
Mm-hmm.
becoming very, very important, uh, which is not being taken, because we have seen companies which had cyber risk emanate, and they had to pay a very high ransom to kind of get
Mm-hmm.
rid of it. So it's becoming a very important risk, and nowadays companies own a lot of data of customers, of their clients, and therefore if they don't have proper data security in place, they will have a tough time sometime going forward. Also, product liability issues, right? People think that once I have made a sale, it's done. But once
Mm-hmm.
because the product liability things like the consumer court, etc., are becoming very, very strong, and they are commanding companies to, adhere to certain norms. And if they are not, then probably they will have a higher penalty, loss of customer, loss of brand. And therefore and in today's world, when everyone is so much connected through social media, one bad incident spreads like fire. So you need to be very aware, or in today's world, of the brand you are trying to build. And if you don't have a brand, you will not get valuation from the street that you want to command. Also, governance has been very, very important. Like, for example, board independence. You might have friends, family on the board, but that's no longer being tolerable, because people are
Yes.
looking for truly independence, and whether the rights of shareholders are being accounted for or not. Also, something like business ethics, frauds, etc., have been evaluated very, very carefully through things like third party sorry, related party transactions, or be it how the company behaves overall when it comes to its ethics. So that is also paid very, very close attention by the investor community today. So
Okay.
all three facets are very, very important, though they are all non-financial, but they do have a very financial material impact on the company, and therefore on the valuation that the company gets from the street.
Wonderful. Now,
So
you said you
so
have
I
got
don't
your,
know if we
yeah,
have another slide or not.
yeah.
Yeah. So this is what we were talking about. Is ESG globally is one of the fastest growing investment approaches. It is in a short span of time, it has grown to trillions of dollars. And you take any renowned investor globally, they are very, very serious about ESG factors, and they are saying incrementally all our investments will look at ESG factors into our evaluation. So if you look at any top global pension fund, sovereign wealth fund, or any other institutional investor, they're saying we are looking at ESG. And when it comes to India, they are incrementally talking to investors, or fund managers like us, saying that our investments should reflect ESG factors or evaluation of ESG to make it a holistic assessment of that company. And therefore it's time for investors to be ahead of the curve. Usually what we have seen in markets is that institutional investors come in first, and retail comes in much later, and they don't get the advantage that institutions have enjoyed for a long period. So this is identified as one of the fastest investment approaches globally. And given that still institutions globally are getting or warming up to the idea and incrementally allocating to them, I think for retail investors, it's an idea, or it's an approach that they can take advantage of and be the first mover, and take advantage like what institutions do usually. So I think investors should try and understand this, and if they are convinced, embrace the idea and invest in ESG funds.
Great. Yeah. So, I'm convinced as an investor that I should be investing in a companies who are ESG compliant. Now, you said you have got your own research team. You have got around 165 stocks that you have selected. Now, of course, if I have to invest, so can I go directly? Is there any ESG rating agencies in India, or can I find any way out, or I have to go to a mutual fund? Which way is it better for a retail investor? Do it on his own or going through a mutual fund like yours?
Sure. So there are many rating agencies. There are like 7, 8 rating agencies that are empaneled by AMFI as well, who do research on ESG. But one thing that I think a proprietary research like ours has an edge over that research is, we believe that ESG is not desk research. It's not that there is a disclosure given by the company. You take it at face value and you invest based on that, because
Correct.
the world is so fast moving that you need to collect a lot more data, and secondly you need to verify the claims or disclosures made by the company, at least the material ones. So company may put out certain data, you can't take it at face value because there are a lot of incentives for companies to greenwash their way out,
Mhm.
because
Correct.
a company compulsorily has to publish data today, and if they're not good at it, probably they might try to massage the data in a way that they look better. So there is a lot of incentives for companies to do greenwashing. We jokingly call it ESG becoming ESG. ESG is eyewash, hogwash, and greenwash, and therefore that is a trap that investors should not fall into. Globally, we have seen a lot of companies, a lot of fund managers trying to greenwash their way out. I think regulations are fast catching up. But until then, I think you need to verify the material claims that the company is doing. And the way we do it is doing a 360-degree check of what the company is
Mhm.
saying and doing is the same or not. So our analysts will go and visit plant, factories, talk to management, talk to sustainability heads, and try to talk to the supply chain, the vendors, the customers, the employees, the community that reside
Mhm.
around the factories. So we do a lot of groundwork, channel checks to identify whether the company is saying is gonna be is kind of factual or not, and that I think gives us a lot of edge in terms of the ESG evaluation that we end up doing for those companies. So as a lay investor, even if you get scores, given the things how fast changing they are, the global best practices or gold standards are changing very rapidly. Probably the rating agencies or ones that are doing desk research may have some issues if they are only relying on desk research or disclosures by companies. So I think as a layman, I think it's better to go through a practitioner who is doing a lot of due diligence, and therefore research is one thing and building a
Mhm.
portfolio is very very different. So it's about
Mhm.
looking at good ESG companies, also evaluating the financials of the companies, looking at the past historic track records, etc. Not only what it is today, because when it comes to governance, no, the thing that we believe in is once you shake hands with someone, if you don't get your 5 fingers back, don't shake hands with that person again. So when it
Correct.
comes to governance, you have to be very, very clear who are good guys, who are bad guys. And until you have a good, legitimate reason to say that the bad guy has become good, should not invest in those companies. So there could be, things that have happened in 1990s, 2000s, which many investors may not be aware of. But from a governance standpoint, you need to evaluate holistically what those promoters have done in the past, what those companies managements have done, and therefore that should also play a role in terms of your evaluation and your investing into those companies. So I think it is better to go because it's not just about doing an ESG evaluation, which has to be thorough, but it's also about portfolio construction and investing into those companies. So I think investors will be better off at this stage, at least, until we see more disclosures, more robustness of the processes, and thereafter, till then, they should be going with mutual funds.
Absolutely. So it's a emerging theme, and lot many developments are going to happen, as Chirag says. that institutions have already started taking lots of interest on those companies and those funds. So why only institutions going ahead? So as a retail investors, we should also be, closely following them. There are two questions you talked about. Again, portfolio, right? How much of my investment I should be ideally? I have got multiple choices. I have got now market is in a kind of a bull market uh, going ahead. I have got multiple different choices, but still I want to allocate a certain percentage to the ESG fund. So how much we should be allocating towards that? That's the one question. Second is sectors. Again, of course, it's slightly different. How many different sectors are there? Which prominent sectors are there in your ESG fund? If you can just give some throw some light into this.
Sure. So I completely agree with your point that investors should have a very diversified exposure when it comes to different styles of investing in their portfolio. So, for example, one should have exposure to growth, mid caps, small caps, to value style, to ESG as a style. So, any style we think, any particular style, though it is a diversified basket of stocks, shouldn't be more than 15 to 20% of one's allocation. So given at this stage, ESG is also evolving. So I think one should look at about 15% kind of exposure to ESG as a style, as an approach. And as you gain more understanding of the subject, and as you become more aware, and you're convinced that this is the right way for me to go ahead, which I think should be, because over a period of time, ESG will become mainstream, and therefore there will be a lot of integration of ESG into various styles. Until then, I think you could look at 50% kind of exposure of your equity portfolio into ESG funds. That's one. Second is, if you look at what is ESG, so ESG looking at evaluation quality of businesses, right? And you have leaders in most of the sectors which are very good at ESG, which are very good at their policies, at their behavior, at the way they adhere or take care of the risk involved, or take care of the regulations. And usually these are the compounders that we have seen over a period of time. And time and again, they will, surprise you with how ahead of the curve they are. They will innovate. They will, even if they think that the sector is matured, there is not much room for expansion. They'll surprise you with an innovation that they will do and open up a big market for themselves. So these are quality businesses, and therefore you have participation from most of the sectors, and you will get leaders in each of the sectors. But if you look at our exposure, is very significantly large to IT as a sector.
Correct.
Consumer discretionary is a very big allocation that we have. We are very
Mm-hmm.
overweight on consumer discretionary as a sector, and consumer discretionary is very, very varied or different, diverse sector, I may say, which tells you that there are many companies in various different businesses that are adhering to best ESG practices. And third is large sector we have is banking and financials. So overall, these are the three large sectors. But we have allocation to even material as a sector. We have healthcare as a sector. We have communication services as a sector. So we have a very diverse bouquet, and we have taken the best of the breed, best of the companies in that sector. And I would say these are the quality businesses in each sector which are usually ahead of the curve.
Okay, great. In fact, I think the theme is relatively very new to most of us, so therefore we are not getting much of questions. In fact, again, I would like to request our viewers that कुछ भी questions हैं आपका mind में, you want to know something, please feel free, go ahead, type your question in the chat box, and would love to answer that question. So again, Chirag, coming to the last few points, what are the major challenges and opportunities of ESG investing in the Indian context? Of course, you have already spoken about the opportunities. There are great way forward. It's going to be the way of investing.
Correct.
It's going to be the way of doing business in India. So, any challenges?
So far, data was a big challenge for us. Disclosures very, very, very little, and therefore we were not able to cover like 400, 500 companies. We had to restrict our 150, 200 companies in our coverage. So data
Correct.
was a challenge, but that has already been addressed by regulations. SEBI has mandated top 1,000 companies to disclose a lot more granular information on ESG to a report called BRSR, Business Responsibility Sustainability Report. So this report will give a lot more data to us, which has already started coming out from companies, and therefore we will have a lot more data, a lot more granular details of companies when it comes to their ESG practices. So one is that. Second biggest challenge is verification of claims. We think that we shouldn't take everything at face value, given there is no assurance, no audit of such data. We need to verify certain claims. So we have certain mechanisms. One is from the data itself. We kind of build a matrix in terms of, for example, if I want to look at carbon emissions of or pollution levels of any company. So I'll look at the fuel expenses. I'll look at what is the renewable energy. I'll look at what is the emission levels. And when I make a matrix of similar companies, I get to know which company is trying to fudge its way out and therefore give us more data to questioning that company. And second is through channel checks and a lot of verification or talking to third party or companies surrounding or people or stakeholders surrounding that company, which tells us that we are able to verify a lot of claims that the company puts out, and therefore we are in a better shape. So these have been two big challenges that we have. One is data availability of data, and second is on the verification of claims. But I think we have found more or less a way out to try and tackle these challenges.
Okay, great. Now, again, from the investor's point of view, I'm interested. So, should I take my SIP route, lump sum route? Should Which one do you think is a better way? Uh,
So I think SIP has always been a great way for investors to take exposure because markets have been volatile, and given these are equity investments, they will have the market volatility associated with it. And therefore, though these are good quality businesses and quality usually falls lesser, that is what we witnessed even the COVID fall. When markets fell during COVID time, our ESG fund fell lesser than what markets fell to, which
Very
tells you that
important.
quality stands out. And therefore, given these are quality businesses, but even when market falls, they will also fall, but they might fall lesser, but they will still fall. So over a period of time, I think investors can use the volatility of equity markets to their advantage, and SIP will be a better way to build their portfolio.
Wonderful. Now, again, we are kind of a very optimistic market situation right now. Our market is bullish. Economy is doing well. So, coming as a closing statement, do you what would be your advice? Uh, that yes are going to do better. What's going to be a closing statement with respect to ESG investing in a bull market scenario in next few years to come from the 4 5 years perspective?
Yeah, so if you look at this market today that we are seeing, the bull run that we are seeing, it's very different from the bull run that we saw from 2014 to 2017. 2014 and 17 was more like a hope rally where earnings of the
Okay.
companies were not growing, right? If you look at the PE expansion was taking place, PEs went up, whereas because prices were increasing, earnings of companies were not increasing. Fast forward to today's bull market, we are seeing economic growth. There is activity on the ground. Earnings of companies are increasing. If you look at results, even this season have been pretty good. So there is
Yes,
earnings growth taking place in the economy, and therefore PE levels are very close to average levels that we have seen. They are not very
exactly.
euphoric in nature, and therefore this rally in the market is here to stay because earnings growth is taking place, right? So from that perspective, we might have still a good runway. We are optimistic on markets, on the economy, on the earnings growth story that we are seeing in India. So overall, a good way to play this rally is to invest in quality companies because when it comes to the PE expansion, people will be more hopeful on quality companies rather than companies that could, if there is any shock to the economy, be it from the global world or India world or India, that company should be able to absorb that shock. So quality is a better way to play out to capture the upside. Else, if there is a shock and there is a downside in markets for any reason, you are well protected, not well protected, I would say, but you are still in better companies, which will kind of probably protect your capital on a relative basis at least, and therefore give you a much smoother journey towards your investments. So I think it's great way. I think ESG is quality, is synonymous to quality today, and I think it's a better tool to evaluate quality of companies. And therefore, if quality is a better way you think you should participate in this bull market, then I think ESG funds are the way to. And I think most people may have allocation to different styles. It's time that you
Mhm.
diversify into quality companies through ESG funds. So I think it will help you complete your diversity in your equity allocation. And therefore, ESG funds are the way to increase your allocation in this bull market.
Absolutely. I think you have concluded fantastically. So it's not a hope rally, it's a real rally. We have seen in the past P expansions plus 40. So this time it is real economic development, and those companies are going to perform even better who are ESG compliant. So yes, I think it's a wonderful talking to you. It's a lots of learning today. In fact, I'm sure our viewers also learned a lot and really got excited. For those who are new, the concept is new to them. And thanks a lot, Chirag. Looking forward to again have a session again with you in future.
Thank you,
Thank you
Neeraj.
so
It
much.
was a pleasure talking to you. Yeah. Thank you so
Thank
much.
you.